Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about USD JPY. Now, why do I want to speak about USD JPY? Well, at the moment, we do have quite interesting price action and structure for a potential opportunity. So as usual, what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. And obviously, we will also see what we have from a commitment of traders perspective, which is basically the CO2 data. So what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided a strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.382 of the Fibonacci taken on this monthly impulse, which is a quite strong support zone from which we can expect, and we did expect the market to provide a rejection. And in fact, that is exactly what the market did. And basically, at the moment, what we are seeing here is the completion of this impulse correction and impulse pattern to the upside. And there is definitely the possibility to see this market provide a higher high here on the monthly time frame. Going down on the weekly time frame, what do we have? Now, also here on the weekly, we can see that the structure that the market has is absolutely bullish. In fact, we can see how the market broke this previous weekly resistance here, and again resistance here, with this move to the upside. And as you know, after a break of resistance, that previous resistance is turned support. So basically, we had a break above this previous resistance, retest of the new support, and rejection to the upside. And in fact, the market has now also created a new higher high. Basically, the market has provided a new structure level, which is this previous weekly resistance, which is now turned support. And the market has in fact already broken above this level, and there is the possibility to see the market go for a retest before a potential continuation to the upside. So monthly and weekly both seem quite bullish. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what do we have? Now, here on the daily time frame, I had spoken about USD JPY a couple of times in the past. I spoke about USD JPY after the market had provided this W formation. When the market was here, I made a full breakdown explaining all the reasons for which, first, we wanted to see a move to the downside for the market to complete the pattern at the neckline. And then from here, I made another breakdown explaining all the reasons for which from here, we wanted to see the market provide the continuation to the upside and for the market to provide a higher high. And in fact, that is exactly what the market did. And by the way, I will link these two previous analyses in the description so you can go and check them out for further reference and more free education. Now, at the moment, what we can see is that we are testing once again another interesting structure level. In fact, in providing this move to the upside, the market has also broken above this previous resistance, which is now turned support. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. So if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a confluence of support, which is in between this 0.382 of the Fibonacci taken on the daily impulse with this previous resistance turn support that we can expect the market to test before a potential rejection to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, we can see how lately net positions have dropped massively. We went from having 50K net positions with 13K shorts and 63K longs. So way more longs than shorts from an institutional perspective, all the way down to having a massively negative net positioning with 5.2K shorts added with the last report and 4.2K longs getting closed, reaching 69K short positions and 22.9K longs. So the JPY has been getting very weak, and we can expect USD JPY to provide more continuation to the upside. So how we can be approaching this potential longing opportunity with students. Now, as usual, what I will be doing and what we will be doing is being reactive and not predictive. What does it mean? Now, the monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, we will be monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, with students, we will be adding USD JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we can be looking for a nice long with a good risk to reward and good probabilities at that point for the move to the upside, for the market to complete this impulse correction and impulse pattern to the upside, and possibly to see the market provide a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.